Hey everyone, it's James at Eurevo, New York's #1 commission rebate brokerage with our October Manhattan market update. And normally we start these things off with the market stats, which we will get to, but I'm seeing so much terrible and frankly incorrect advice about mortgage rates that I wanted to start with that. And most succinctly, and to get to the point, nobody knows where mortgage rates are going to go, and you should never feel pressured to buy or sell because of where mortgage rates are going to go. Nobody knows. It's as simple as that. I'm actually seeing contradicting advice from the community. There was a piece from NAR's chief economist this month that got a lot of attention, where he said that if mortgage rates hit 7%, they are going to go to 8.5% because that was the next level of resistance or something like that, which is just stupid for lack of a better term. And then I'm also hearing brokers tell their clients that if mortgage rates are a little high now, don't worry about it because you will be able to refi later at a lower interest rate because mortgage rates are going to go down. So mortgage rates are going to go up, they're going to go down, really depends on who you're talking to and frankly what their objectives are. But they're all wrong. I mean, they might be right, but if they are right, it's because they flipped their coin and they called heads and it came up heads. It's as simple as that. So if you watch these market updates every month, you've seen these charts before, at least this chart. When people talk about where mortgage rates are going, they're usually not talking about mortgage rates. They think they are, but they're talking about the Fed funds rate. Because the Fed funds rate has gone up, and it will continue to go up. But that doesn't mean that mortgage rates are going to go up. And you can see that here. The Fed rate only gets changed a couple times a year, and mortgage rates are moving every day. So obviously, there's more to it than just the Fed funds rate. What does move mortgage rates is the 10-year U.S. Treasury. So you can see here, basically there's a 1-for-1 correlation between the two. If the 10-year U.S. Treasury goes up, so do mortgage rates, and vice versa. So if you want to know where mortgage rates are going, just look at the 10-year U.S. Treasury. And if you're forecasting where mortgage rates are going to go, you're also forecasting what the 10-year U.S. Treasury is going to do. That is incredibly valuable information, and suffice it to say, your broker does not know where the 10-year U.S. Treasury is going. You could become a billionaire overnight with that kind of information. It's the deepest, most widely researched, largest, most liquid market in the world, and there are thousands and thousands of people trying to figure out every little tick every little day. So your broker doesn't know. What is interesting is the spread is elevated right now. So if you did put a gun to my head and said, where are mortgage rates going to go? I would say, well, the bias would be to the downside just because if the spread, basically the premium that 30-year fixed rate is going for relative to the 10-year U.S. Treasury is elevated right now. Is it going to happen? Probably. Over what time frame? I don't know. So again, I wouldn't tell you to wait because mortgage rates are going to go down. I wouldn't tell you to act now because mortgage rates are going to go up. You should only buy when you're comfortable buying at today's mortgage rates with the corresponding monthly payment. It's as simple as that. So that's my PSA for the month. Now we can get to the market stats. I mean, basically everything we've been talking about for the last few months is happening. This isn't rocket science. You have higher mortgage rates, sales are going to slow. And you can see that here. We are down 41% in terms of the number of contracts that were signed in October. That's a deceleration or a further decline than what we've been seeing the last couple months. When we look at this by price point, it is actually the opposite of what you would normally expect because financing is more common at lower price points. So you would think the lower end would be more affected by higher mortgage rates. I wouldn't read too much into this. I think the reason that the higher end is slowing down to a greater degree than the lower end is because the higher end was just so strong last year. So coming back down to earth is more of a decline. So I wouldn't get too carried away about this. And then on the inventory side, basically the same thing as last month. We saw a 1% increase. I do think that this will stay under control. So even though demand is declining, the number of buyers, the number of contracts that are getting signed, the supply side should stay under control. I don't think we're going to see this rocket higher for the reasons that we were talking about last month, where think about if you're a one-bedroom buyer or a one-bedroom owner and you're thinking about upgrading to a two-bedroom, but you have a 3% mortgage on your one-bedroom and you'd be looking at a 7% mortgage on your two-bedroom, you're probably going to ride it out in that one bedroom for a little bit longer. So people are going to hold on to the properties. Would-be sellers are going to hold on to their properties for longer, which is going to reduce the amount of supply that's on the market and keep overall inventory in check. So even though supply is down, affordability is down, prices are down a little bit, but that's just very anecdotal because you're always backwards looking there. I don't think we're going to see any sort of significant deterioration in the overall market, significant deterioration in pricing because the supply side of the equation is still very much under control. But again, we say this every month, you really have to look at specific markets, specific property types, specific price points. So if you are in the market and you want us to slice this data up and tailor it specifically to your search, we are happy to. We can. It's very easy. We'd be also happy to represent you on your transaction, get you a commission rebate for up to 2% of the purchase price, and just generally answer any questions that you have. So you can reach out to me directly, james@urevo.com. Thanks for watching, and we'll see you next month. Bye.